MMT, I'm looking at Nasdaq March $2,450 call. Again, I'm looking at a peak up here during as they've walked this thing straight up parabolically on the call side, that at times we're going to be buyers on these calls. I'm just going to go through some of them for the March one, because when the tech sector does pull back, here's a $2,500 call that's hitting the peak up here. And, you know, they ran from $20 up to 86 on this one here. They're at all-time highs. And I'm just using the March contract as, and I'll throw in some others as well. Here is a 24.25 call for calendar 12 that was way down here in value, $42, and they've gone to $81. They were as low, yeah, $42 here. I don't know what this spike is. That's got to be a bad print, but this is a 24.25 call that's in the money, and when they do pull back, we'll be buyers of these. And I'm just showing what some of the March would look like, because we can get a fairly decent pullback. They're going to bring that side of the market down. When I take a look at the March $2,400 put, damn thing was $300. They gapped him down, they gapped him down, they gapped him down, they brought him down here, they hit a bottom. Hopefully they see a value in the next few weeks of taking these back up to right around, let's say, even if we got them back up here to 62.58 as a bottom here, the top end of that bar right there is at 51.26. So there is a fairly decent trade when the tech sector pulls back. The leader in the Nasdaq 100 is heavily tech weighted, at the top of the best performers of the highest beta. So what my point is, after the earnings start to wind down this week, we're pretty much out of there. And so we're going to be looking for the lower value. This is a March $2,400 put. That's cheap. Now, when we look at other cheap ones, we look at a 24.50 put that, based on that, those things coming down, that the 24.50 put is not overbought. It's deflated. It's not like the call side. They have to adjust, and they will adjust. They always do. They always have. The short-term trading is to take a look and to monitor. This doesn't have a lot, and what is it? It's a 25.50 put right up where that Nasdaq 100 is. And the thing about it is, there's room to trade these back up to, from the low here, when we do get a market correction, a bull correction that is. These are $48 on the low. And these can trade back up into the neighborhood of $82. There's some upside. They can get back up to $109. There will be some adjustments that will be made, because seasonality, technology, if there's going to be a spring rally, the market has to balance itself. You're just not, all the money is on this side of the market. All the money is on the call side of the market. The 2,500. These are contracts, unlike the bull. If you look at this one here, and that bull has been pretty strong, but if I go over here to the $2,500 call, I'm getting pretty top end heavy, like all of them. They've ran their course. You got to come down at some point, and you will. And when they come down, we're looking at buying them. I'd like to see it come back to 40. Or better yet, wash them back down to where they started. Take that deflated back down here to the base. Okay? So, when it comes to this Nasdaq 100, it's a very touchy trade. What would bring the Nasdaq 100 calls down quicker on a pullback would be where the semiconductors had performed, where the heavy tech sector had performed, where tech would be a pullback. When tech pulls back, of course, these calls are going to pull back. So we're going to be monitoring the whole thing on this Nasdaq 100. And the same thing with the S&P 500. So here's our Nasdaq 100 317 scenario. And you can see all the prices here, how high dollar the prices are here, and how low dollar this side of the market is for the pullbacks. There's going to be some trades in here. These calls will pull back to $50 at some point, and even lower. When we get the tech rally that rallied these things up, will be the first ones that have the reversal that will pull them back. Then tech will bounce, and that's how both call and put side will adjust itself as far as that goes. And when it does pull back and we start going further out, you can see where all of the money is in April here. As amazing as it is, there's just too much money on this side of the market at the moment. That's when pullbacks happen. So we're going to put together a when that tech sector wants to retrace. That will be when the calls will come down. I'm going to conclude Nasdaq 100. I'm going to conclude Nasdaq 100 218. I'm going to conclude the fact that I'm going to be an intraday buyer next week off of lows if there's a trade, depending on what markets want to do during the calendar monthly options expiration. Is that I'd be looking at the 25.50, the call that just hit $30 on a weekly, kind of peaked way up here, had to come down like that. Sorry. So the call side has to come down, and the short-term put side will be watching the 25.75 for intraday, as we will do, because there's some big freaking fat trades intraday that can happen. They gapped them down right here at about $120. So short term, there's some big possibilities next week if we continue a correction, or if we continue to sell at resistance, because we're too overbought. I've already showed it, all the live analysis, everything is overbought, overbought bull. Overbought bull has to rest, overbought bull has to come down to set up the next 52-week breakouts. So short term, we're all over Nasdaq 100.